Good morning, folks. Frank Zarella here. It's the 9th of October, 8 o'clock in the morning. Doing a quick video before the market opens, just to let you know what's going on. But first and foremost, let's take a look at, go over some of the names in the weekly portfolio. So we own the SQQs, which we put in yesterday. It's a mean reversion trade. I think that there's a good chance that we might pull back here. Although it's even though we're overbought and a pullback looks imminent, I don't know if it's going to be that easy. And overbought indicators don't work as well as oversold indicators. So that's one. Loco, looks good. Closed at 16.19 yesterday. First target is 16.90. There was some call buying yesterday, which is good. Casey, also looking good. INSG and Crone. These are two stocks that we took 3 quarters off already. And then the rest, as of right now, my stop on the last piece that's left is at break even. And I'm just going to let it ride, see how far it goes, and then once it sets a new base, a new pivot, then I'll raise the stop. VO, mid caps, it's just a core holding. I mean, I'm a firm believer that you have to own a piece of the market. Piece of the market being, S&P 500, QQQs, IWM, mid caps, Dow Jones, whatever the case may be. If you're a swing trader and you own a piece of the market, which I think you should, you're never going to feel behind the 8 ball when the market is running without you, because you are involved in the market. For example, all my accounts, almost every single one of my accounts has half of their portfolio in these ETFs: IWM, VO, S&P 500, 50 FFTY, and as the market moves higher and they become a little too much for the portfolio, then we trim it down. As the market goes lower, like it did, a week ago, we were down extremely oversold. The percentage level goes up a little bit higher. I'm a firm believer that you need to buy these things on the way down when we're oversold, and then as we start moving higher, then you can trim some of that fat. So that's VO and IWM. So that's pretty much it. So let's go over. First, let's look at SQQ. Look, so it's, right over here. I mean, we were at, over here, people were calling for a crash. We were extremely oversold. Now we're down here. Now they're saying that we're never going to go down again. So that's that. We also have INSG. Had a big move. Chances are that it's probably going to consolidate. And this is one of the issues with trend following, that if a lot of times you don't take anything off just because you say, for example, nothing has changed with the trend, let me follow it, and then you end up giving up a lot of the gains, or you end up sitting through weeks and weeks of sideways action. So here, this is a beautiful looking chart. We got it right at the right time, and chances are that this is going to trade sideways just like it did here after this big move. And this is the reason why I'm a firm believer in taking some off on the way up, because chances are that you can find a much better risk-reward setup when you compare it to owning this stock right over here. So in other words, this stock can go sideways for another 4 to 8 weeks and then go to 10. But in the meantime, you can find something that's just getting started. You can get that first initial push. So again, I'm a firm believer in you take some off the table and then you let the rest run to see how far it takes you. Right now, the stop is at break even for 403, 405, but we're probably going to sit to some sideways action, and hopefully, this becomes a much bigger mover. The same thing for Crone, same exact thing. For example, here has a big move, and if you don't take some off, then you give up a bunch of those gains, and then you don't get back to these highs until months later. But if you take some off, you take a bunch of it off, it makes it a lot easier for you to sit through this consolidation period here. And more importantly, you can take that money from an extended setup and get involved in something that's just getting started. So you're putting your money to much better use, okay? And that's part of swing trading. Swing trading, that you want to take advantage of of the short-term momentum burst, and just get involved with better risk-reward trades as your holdings get extended. Okay, so let's take a look at the market right now. The SPY, from panic selling to panic buying, another gap up today. We closed at 256.77. We're printing right now 257.51. That you have some obvious resistance here, right over here at this 260 level. Well, here's a daily. Here at the 260 level, we might get there, we might not get there. But short term we're a little overheated. But again, oversold doesn't work as well as overbought indicators don't work as well as oversold indicators. T2 106. Again, we went from negative 246 here to a scorching hot 215. This doesn't happen too often. As you can see here, this chart goes back a year. And if I do the weekly chart, again, when you get to these levels, you're just scorching hot. The risk reward just shifts a little bit from the bulls to the bears here. If you take a look at the VIX, went from 35 all the way down to 20, and these type of things happen. I mean, if you take a look at when we had a drawdown back at the beginning of last year. I mean, we had a huge drawdown of roughly right over here, call it 10%, and then we had a big rally of roughly 8%. We pretty much retraced 90% of the move. And then we had another downturn. We had a quick swoosh. That's what I think is going to happen now, that we're a little overextended. We're going to get a quick down move and then go up again and probably do something like this. This is a big possibility. And right over here, it was the same thing. If you look at the T106, the MAC oscillator, the same thing. We went from oversold, roughly negative 259 all the way back over here, which was roughly 149, not even as high as we did over here, but that's what happened. And when you get these type of overbought indicators and you get this type of buying, this push higher, typically it doesn't die down that quickly. Okay, so that's something to keep in mind, that we're probably going to get a big downward move and then probably go up again. People are going to want to position themselves for a rally, thinking that the worst is over, and it could be. It's always a possibility, right? So going back to the beginning of last year, we had a big down move, a big rally, and this is what typically happens. Even if you go back to, let's just go back to 2011, we had a similar situation where we're down big. This is a nice rally, call it from 110 to roughly 122, which is roughly about 10%. We had a big, shakeout, and then a run higher, and then back again, and then we retested later. This is what typically happens. So far, this retracement of the 20% down move that we had over the last couple of months, it's not out of the ordinary. It's what usually happens. So it's extremely hard to get too excited about the long side after such a big move higher. And although I believe that the risk reward favors now the short side here in the short term, the next couple of days, I still have a watch list of stocks on the long side, okay? Because I think it's important that, like for example, here you have my rolling 5-day watch list, which means that this is the watch list of stocks that I had on my daily list on 12/31. This is from 12/19, actually 1/2, January 2nd, 2019, 1/3, 1/4, 1/7, 1/8. And this gives you more information about what's going on with the market. As you can see here, this is the tracking percent of what they're up or down since they were put on the list. And this gives you some information. These stocks are up a lot more than expected. And that's exactly what happens when you're oversold, that they overshoot them to the downside. Now they're going to overshoot them to the upside. But it's extremely hard to chase here, okay? So, for example, something like this, UNT, we got involved here at 1484, down 3 days in a row, up today. So we were involved here, and then it's a straight line higher. I mean, this stock hasn't broken the previous day low since it changed its little pattern right over here. And you can see here that when you're oversold, resistance levels don't matter as much. It went right through the 20-day moving average like it wasn't even there. You know, AVLR, similar situation, flag right over here, straight up. EC, you know, another oil stock, similar situation, down 3 days in a row. Up here, hasn't broken the previous day low, and it just goes right through the moving averages and potential resistance like it's not even there. But it's extremely hard to chase here and not think that more than likely this is probably going to go sideways before it moves higher. ALGT, similar situation, overshoots to the downside, down multiple days in a row up here. This is a great scan, by the way, as you know, from the videos that I posted before here in the room, that when we're oversold, this is one of the best scans out there, which is stocks that are down multiple days in a row and up today. You need to wait for that up day so you can see that trend change. And you can see here, straight up in a straight line, zoomies. So either way, let's take a look at what my watch list today. DRIP, this is an oil and gas inverse ETF. Down from 25 down to 11. This is a mean reversion play. But I think that in order for you to get in size, you need to wait for that green candle. If you look at the opposite, XOP, you know, it looks a little extended here. It's tough to buy here, okay? And if you look at some of the holdings in the XOP sector, you know, these are not great risk-reward trades to the upside. I mean, look, I mean, these, you can consider these to be potentially shorting opportunities because we are in a downtrend. So coming into today, the fact that we're overbought, DRIP is one that I'm going to be watching closely, and I'm going to be watching for a green candle, which changes this pattern here in the short term. CDLX is you know, something that I consider to be a long idea. Right now, these bottom setups, stocks that are trading near lows, this is what's working right now. Usually, when you're oversold and you get that first impulse bounce, the stocks that have been beaten up the most are the ones that act the best, as you can see when we flagged some of these ALGT, Zoomies, Dine Equity. These all were trading near lows, but they had huge bounces because they were very oversold. You know, so CDLX. So what do we have here? We have an inside day. We have a stock that's been trading below its 10 and 20-day moving averages for a long time, ever since September 28th. Now, you know, so every time it got there, you had a seller, and now the stock is trading above these averages. This is what I consider a character change. So now these moving averages that were resistance, that means the seller is out of the way, and now you probably have a new crop of buyer, and I expect these averages to act as support. So in a situation like this, if this market were to, you know, gap down today, so they're gapping up, I would put an order here at 12.13 with a stop here at the low of the day, 11.16, and I would be looking for a multiple day move higher. ADRO, similar situation, another bottom fish candidate, had a nice move here, consolidating, printed an inside day. In a situation like this, on a normal day where we're not gapping up after 9-10 days of upside action and no consolidation, you know, I would have put a buy stop at 320 with a stop here at the low of the day, and look for a move up to 350, $4. UXIN, something that I tried the other day here at 380, was down 7 days in a row up today, but I got stopped out because my stop was at 340. It still looks, you know, still an interesting situation. This is a stock that when it catches momentum like it does here, it catches it for a few days and it's a wild mover. This one, you know, again, my alert will be at 345. My buy stop will be 350, 355, with a stop here at $3.10. Dunkin' Donuts is something, it's a short idea, okay? Here you have a breakdown. Now you have a stock that was oversold, now going right back up to this resistance level. You know, I'm not big into shorting individual names. I'd rather take the easy route and go with the inverse ETFs. But if you're into shorting, then, you know, you might want to take a little nibble here and then wait until some confirmation being, you know, through the previous day low to put on the rest of the order, the rest of the size. Disney, similar situation, down huge, big bounce. Now back to the 50-day moving average and 63-day moving average. In a situation like this, I will be looking to short the stock at 111.10. It closed at 111.42, so it's got to get through this low and then stop right over here at 112.60. EDIX was on the list yesterday. This looks okay. Consolidating here, not much volume, but it looks okay. NIE was on the list yesterday, printed an inside day, still looks good. It's the Chinese stock. I like the stock going through 709, 710, buy stop 715 with a stop, underneath the 10-day moving average, which is roughly 670. Now, due to the gap up in the market, if these things trigger first first 30 minutes, I'm just not going to take them. As of right now, that's my feeling. SPSX, here's the gap down. This is the inverse S&P 500. Very close to this 50-day moving average and the 63-day moving average. This is when these things should actually bounce. But we'll see. I think we have to wait to get aggressive. We have to wait for a green day. Merck, interesting situation. I'm not a big fan because it's got 2.7 billion shares in the float, so it's going to take a lot to move this stock. But it had a big move, going sideways for a few days, printed an inside day. This stock looks good to me. Alert 76.21, buy stop 76.31 with a stop over here at 74.90. But again, it's 2.7 billion shares in the float. So it takes a lot to move this stock higher. But on the flip side, if you have a large account, you can easily buy a lot of shares of this without moving the stock. TZA, similar situation. This is the IWM small cap inverse ETF, down from 19 down to 1260. I like this actually, and chances are that I'm going to buy. I have some already, right over here under $13 a share. I'm probably going to add, especially if it goes green. MX Magnet Chip, same situation. 10-20-day moving average acting as resistance for a long time. Now the stock is trading above it. Sideways action for about a month. Printed an inside day. I like the stock going through 665. Buy stop call at 670, 675. Stop right over here at $6.40. PAGP. This looks like a short to me if it can get through 2309, which is yesterday's low, with a stop right over here at 2380. But again, instead of shorting this, I'd much rather go into DRIP. PLCE, similar bottom fish situation, 10-20-day moving averages. The white line is the 10-day moving average. The yellow line is the 20-day moving average, and the white is the 10-day moving average. Resistance ever since November. It's finally now getting above those levels. Had a big day the day before yesterday on Monday, printed an inside day yesterday. I like the stock going through 93.41, buy stop 93.51 with a stop here at 87.80. NBEV, it looks okay. Tilray had a big day yesterday. CGC is up nice pre-market, due to an upgrade. So NBEV printed an inside day. If it goes to 560, it can have a nice move higher. The point is, let me just do this one. DOCU, which I mentioned yesterday in the room, same situation. 10-20-day moving average, 50-day moving average acting as resistance. Now we're finally getting above. I like this setup a lot, but again, the market is the issue here. The market is gapping up. It's overbought. So the risk reward ratio for the bulls for new swing ideas is extremely tough. You can do a few things. You can just completely skip it and say, hey, I'm not going to get involved. That's one. Number two, you can look at it from the day trading situation where you're just going to day trade these things and not plan to hold for a few days. Or you can also just take the trigger, but if you typically are buying 1,000 shares, then you reduce that size to 500 to 250 shares because the market it's a little overbought. And typically, usually what you want to see when the market is this overbought is you want to see the indices move sideways, and you want to continue to see the individual common stocks move on their own. I don't know if that's going to happen because so far the correlation across the board is extremely high, and that's typically the case when you have when you're in the corrective phase of the market where everything is pretty much moving together. And that happened here on the way down, and it happened here these 2 days. This big down day, everything went down for the most part. So everything is correlated to one. So you can do that. You can just skip it. skip the daily ideas, or if you want to just take the trades for some reason or another, you like one of the one of these setups, maybe you reduce the size, or maybe you only day trade it. But for me, coming into today so far with this gap up, what looks interesting to me is drip and the inverse ETFs, one which we already have for the weekly portfolio. So trade them well and be well, and I'll see you guys in the room.